Hello guys, and welcome back to my channel. I'm so happy to be back. In today's video, we are going to talk about how Bitcoin is very likely to hit $250,000 by the end of this year. This is what Tom Lee, one of the top investors in the world, arguably, told CNBC in his latest interview.
95% of all Bitcoin's been mined, but 95% of the world doesn't own Bitcoin. So I just think that there's still a huge demand versus supply imbalance, meaning there's a lot more potential buyers of Bitcoin over the next 10 years. And so I think there's a lot of upside into year end.
Into your like 150 target.
Yeah, 150, maybe 200, even 250 this year.
What?
And he did not stop there. In the long run, he believes Bitcoin could reach $3 million. And I agree. I think Bitcoin is for sure going to hit at least 1 million, but this individual knows way more than I do on economics, and this is what he is projecting. So in today's show, we're going to dive into where the capital is flowing. We're going to talk about Ethereum flipping Bitcoin in trading volume, Solana's Treasury worth billions of dollars, and Dogecoin's first ETF. And it does indeed appear the entire altcoin market is getting ready to break out. Now, I know I'm always saying this on my channel, but I believe it. And as I've said before, sometimes moments in time are prolonged. They're not just events that happen in one day. They're patterns that accumulate that eventually paint a picture for us based off of historical patterns. And this is what tells us where we are in the market. That said, it's not all sunshine and rainbows, as they say. Beneath the surface, we know Bitcoin whales have sold over 100,000 Bitcoin in just the past month. That's why I'm also going to break down, because I try to always be very fair and cohesive in my news and market coverage for you. We are also going to break down 3 risks you need to be aware of, and the ones threatening crypto in the short, medium, and long term. So are you ready? Because I am. So let's get into it, guys. So let's start by going over a risk that is going on right now that you should be aware of. There was a massive NPM supply chain hack that just shook the market and the internet. And if you're not familiar, which I don't blame you if you're not, NPM stands for essentially the App Store for developers. It's where millions of websites and apps pull pre-built code called dependencies, so they don't have to reinvent the wheel every time. Now, the problem, and what affects you and hopefully does not, and that's why I'm sharing it with you, is that one of those dependencies was hacked. So essentially, this means that some projects that were going to this repository, so to speak, of code, may have indeed pulled in the hacked, malicious code automatically. Now, what is so malicious of what this hacker did was that they secretly swapped out wallet addresses behind the scenes. So when an innocent person like you or me went to go approve a transaction, their crypto, for some people, ended up in the hacker's wallet instead. The transaction appeared normal on the forefront, on the, the UI, on the user side of the app, but unless they were carefully checking every single character in the address, it was very easy to trick them and have them approve the wrong transaction, sending their crypto to the hacker's wallet. Thankfully, most projects, they pin their dependencies, they pin their code, meaning they lock in the safe version of the code and don't auto-update. Only the sites that push automatic updates during this hack window were exposed to the vulnerability of having funds from their users end up in the hacker's wallet. Now, the catch is that, as I said, it's very difficult for people in general to sit there knowing, which site is exposed. They would have to know the way, the project updates its code periodically, and that's not always readily available for us to know. Anyway, that's why the safest move right now, because it is ongoing, is to pause non-essential transactions and instead simply use your hardware wallet, where the true destination address shows up on your device before you hit approve. I think best practice is just to to give this some time until it's announced and cleared. Otherwise, this could become extremely risky and costly for you, and I would not want that. Anyway, follow me on X at Lil, like little, Lil underscore disruptor, and I'll keep you updated on this whole fiasco as it resolves itself, hopefully. Now, if we look ahead to the next couple of weeks, there's a big red flag in front of us that will very likely affect the market, affect your crypto holdings, and this is why I want to share it with you. On Wednesday, so just tomorrow, September 10th, the PPI, okay, it stands for the Producer Price Index. That shows how much businesses are paying for goods and services, which is essentially the basic upstream signal for inflation before it hits consumers. That is coming out tomorrow. Then on Thursday, the very next day, September 11th, the infamous September 11th, we get the CPI data, the Consumer Price Index data. Now, this is one of the Fed's key inflation indicators because it tracks what you and I actually pay for food, for rent, for gas, and for healthcare. And then the following week, okay, next week on September 16th and 17th, which I'll be covering carefully on my channel, the Fed makes its interest rate decision. It's here. Right now, the market is almost certain we'll see a rate cut. According to CME's FedWatch tool, there's about an 89% chance of rates moving down to the 400, 425 range, and only about a 10% chance of it going deeper to a 375 or a 400 range. The risk here is obvious because when traders are already this convinced, the announcement itself can trigger a classic sell the news reaction, meaning the market will dump temporarily. Now, mind you, if you're holding good blue chip tokens, this should only be an opportunity for you to see the crypto market on sale for specific blue chip tokens, especially Bitcoin, Ethereum. So you should not freak out about this, but I'm just letting you know in advance so that you're prepared. Now, if we add in historical information or patterns, this setup is a little trickier still. September, we know statistically, okay, is the worst month of the year for risk assets. Over the past 20 years, just so you're aware, the S&P 500 has averaged a negative return of about 0.7% in September. It's one of only 2 months on the whole calendar year with a negative average, the other being June. And we've seen this play out plenty of times before. Markets grind higher into the meeting, they pump, and then they dip red for a day or two after the announcement, and then they start to recover. The inflation numbers will set the tone, and the Fed's move will decide the tempo, so to speak. And how traders react around the moment could guide the market's direction for the next few weeks. Now, let's step back and talk about a red flag sort of signal that isn't about this week or even this year, but we're talking about the next decade in time. AI. AI is moving like a freight train with no brakes. We know this. It's like an AI intern that never stops learning, where at first, kind of like a good assistant, it helps you with the small tasks. But then because it's very, very smart, it starts taking on the full job. And every year it levels up more until eventually sometimes they end up replacing their boss. And the forecasts that we have right now paint a very clear picture of where this is all heading. McKinsey estimates that by 2030, so like less than 5 years away, nearly a third of all work hours in the US and Europe could be automated. Building on top of that, Goldman Sachs warns the impact is global. I think we all know this. With as many as 300 million jobs potentially exposed to being replaced. And the OECD, which is a group of over 35 of the world's most advanced economies, ties the story together for us. Their analysis shows that almost a third of jobs across those countries fall into the high risk category, meaning the kind of work that most of us do today could be handled by machines in the near future. Now, this does not mean there will be mass unemployment overnight. That's not how these things happen. They happen slowly and then suddenly. But this does point to a decade of mass disruption coming up ahead of us where we will have to upskill. So I do encourage you to jump in all into AI, find how you can leverage it to upskill your skill set, because those who do not learn to incorporate AI into what they do will get left behind. We are seeing a period where industries will be entirely reshaped. And if governments and companies don't manage the transition carefully, the fallout could rival or even exceed a recession. Now, I don't think so because I happen to also believe, for separate studies that I do, that basic income for all, okay, will very likely be a bill here proposed soon. Hopefully not. This is a far larger conversation we can take up in a different video if you want. Let me know in the comments. But I believe this is very likely could be part of this global agenda, which hopefully Trump stops, of this whole I don't know if you've heard it, but this slogan that's gone around for this great like reset or whatnot, about how like we will own nothing and be happy, right? Like, what does that mean? It means that the government will own everything, like including its citizens, right? That's what was so important about them vetoing the CBDCs, the, what are they called? Like the global, like the national currency, right? I'm like fumbling on my words, sorry. Anyway, it's part of a larger conversation, but hopefully that doesn't happen. But I think it's very likely to happen, where they just give everyone a standard income so that like the economy doesn't go berserk, it doesn't go crazy, because otherwise we will be seeing riots, we will be seeing a lot of social unrest. So I think they're going to give everyone an income, but it's going to be tied to like your rights as like a citizen. Anyway, separate theories I have. Let me know if you want me to go into this in further detail later. Anyway, this is a profound shift that will shape how economies and societies function for decades to come, guys. So now we've mapped out the risks, okay? We've mapped out the immediate hack that's going on, the Fed's short-term trap, and the long-term shockwave from AI. But markets don't just move on risk. They move on where capital is flowing right now. And even though some top investors are calling for Bitcoin to go up to like $250,000 by December, when you follow the money, one asset is starting to stand out. Last week, Ethereum investment funds reported their largest outflow ever, nearly $788 million pulled. And at the same time, Bitcoin ETFs brought in $245 million. At first glance, it looks like Ethereum is losing ground. But here's a twist. Behind the scenes, Bitmine scooped up 202,469 Ethereum in a single week. That's about $871 million, and pushes their total reserves to over 2 million ETH, roughly 1.7% of the entire supply, valued around $8.9 billion. And the signals don't just stop there. For the first time in 7 years, Ethereum just overtook Bitcoin in spot trading volume, $480 billion on ETH pairs in August versus $401 billion for Bitcoin. Stablecoins tell the same story. Supply on Ethereum just hit an all-time high of $185 billion, with $5 billion added in a single week. So from billion-dollar buyers to trading desks to stablecoin issuers, the tide of capital is shifting towards Ethereum. And these are the kind of forces that drive exponential growth over time. And I know retail these last couple of weeks have been quiet. However, some of the biggest players in the market are positioning themselves, and with serious size. On the Ethereum side, for instance, Bitmine is not slowing down. As we mentioned earlier, they already built one of the largest ETH treasuries in the world. And now they've added another 65 million through Galaxy's OTC desk. Their chairman, Tom Lee, as I was saying in my intro, described this as Ethereum's 1971 moment, the point where it begins to function as true monetary infrastructure, just like gold did when it broke away from the dollar. And at the same time, Solana is attracting its own wave of institutional buyers. Forward Industries has secured commitments of more than $1.6 billion to build one of the largest Solana treasuries ever created, a scale of capital that shows how serious institutions are moving into the ecosystem. The timing could not be more critical either. The SEC's final deadline for a Solana spot ETF lands on October 10th, just 32 days away, like about 1 month away, with analysts giving it a 95% chance of approval, and I agree. And this week, the first Doge ETF, the Rex Osprey Doge ETF with the ticker Doge, D-O-J-E, is also expected to launch. And it's coming from the same team that built the first Solana plus staking ETF, showing just how quickly the pipeline is expanding from Bitcoin to Ethereum to Solana and now even meme coins. And it's not just that, guys. The entire altcoin market outside of Bitcoin and ETH is lining up for total breakout. On the chart, the total 3, which is just basically the total market cap, excluding, except Bitcoin and Ethereum, has been consolidating for years in a massive ascending triangle. Now it's pressing against resistance again. A setup that often precedes explosive moves up. That's the hidden demand wave showing up on a structural level. Capital is not just flowing into individual treasuries or ETFs. It's positioning for the entire alt sector to expand. So as institutions are building long-term positions, there's an on-chain trend that popped up in recent days too. And I want to break it down for you. In the past 30 days, whales have unloaded more than 100,000 Bitcoin, the largest wave of distribution since 2022. Normally, this kind of selling would spark chaos, Yet Bitcoin is still around $113,000. That resilience in the face of the biggest distribution in 3 years is a signal all in itself. And here's how the cycle plays out. Big supply hits the tape. Retail watches nervously, and everyone waits for the floor to give way. But this time is different. While whales are selling, billions in fresh demand are stepping in to buy it up. Whales can trigger fear, but they don't set the future of this market. Institutions do. And right now, those institutions are buying everything whales are selling and offloading into the market. And this brings us to the bigger picture. Because while institutions are soaking up Bitcoin from nervous sellers, the real backdrop for this demand is global, and it starts with gold. Gold just broke to new all-time highs. And for the first time in 30 years, central banks are holding more gold than US Treasuries. And over 40% plan to increase their reserves in gold this year. And 73% expect to cut their dollar exposure because we know the dollar is going down the tank. It is inflating and losing its value at a completely unprecedented rate. And here is why this matters for Bitcoin, so much. Markets, we know for over a decade, have called Bitcoin digital gold. And today, the link is undeniable. As physical gold pushes higher, it raises the floor for Bitcoin alongside it. This is how monetary shifts unfold. Capital first rotates out of treasuries into gold. Then it spills into digital assets, the ones that move faster, settle instantly, and can't be seized. That's the path Bitcoin is walking right now. So today we broke down the risks, the big picture shifts, and the flows shaping the market. Inflation numbers are coming in this week, and the Fed looks set for an imminent rate cut next week, all while top investors are even calling for Bitcoin to hit $250,000 by this Christmas, by the holidays, by December. So the message is clear. Capital is rotating, and institutions are stepping in to buy as much as they can. And the foundation for crypto keeps getting stronger. So yes, there will be volatility along the way. As I'm telling you, this month historically is a little bit volatile and in the red. But as you've seen in this show, Bitcoin, Ethereum, and the broader crypto market remain fundamentally solid despite all of this. So this is the time to lean in. And if you keep tuning in daily, I'll make sure you always get the best research right here. I know I was gone and offline for over a week. I'm so sorry, but I'm back full time now and so excited to come to you every single day. I missed you guys. I love you guys. So just like the video if you learned anything from today's video, and share the video with a friend or family member that needs to know what's going on, because now is the time to get involved, as I've said. And if you want to dive deeper into Solana's ecosystem, especially now while it's building serious momentum and we're looking at a potential ETF to be announced here very soon, make sure to watch this next video. Thank you for watching. I miss you all, and I'll see you guys tomorrow.